If you approve seven-figure wires, listen closely. A relationship manager heard a familiar client's voice and saw emails that looked legitimate. Within 48 hours, $35 million moved. Here's the uncomfortable part. It didn't beat the bank's systems first. It beat the humans. Investigators later alleged the voice was AI cloned, a deep voice impersonation, layered with email corroboration. This was an AI voice scam targeting institutional banking controls. This isn't a crazy 2020 story. It's a control failure mode, and the same trust-based weakness still exists wherever I know their voice counts as verification. Two channels backed each other up, the call and the email, and that's what made it feel verified. In the next 12 minutes, I'll break down exactly how this passes KYC in real life, and the controls institutions typically use that we're missing here. Early 2020, UAE Bank branch, an established corporate client relationship with a Japanese firm's director. Previous legitimate transactions. Voice familiarity built over multiple business conversations. This is CFO-level risk, not a grandma iTunes gift card scam. This is the kind of scenario that ends up in a post-incident board deck. The manager received a call from the known company director discussing a $35 million M&A acquisition. An urgent wire transfer was needed. The voice. The manager believed he recognized it perfectly. Then, matching emails arrived from the director's known address and, according to Forbes, from a lawyer named Martin Zellner with transfer instructions, voice recognition, plus written authorization. Every verification box checked. Or so it seemed. What the manager didn't know was that he was the target of a sophisticated AI voice scam that would become one of the earliest institutional banking frauds using synthetic speech technology. The manager approved the transfer. This wasn't reckless. It followed his normal operational pattern. Voice familiarity from a business relationship, emails from known addresses, and M&A context that fit legitimate transaction patterns. He processed regularly. It matched the pattern the relationship itself had trained him to trust. Here's what that looked like. A client he'd worked with calls about an acquisition. Time sensitive, yes, but M&A transactions are always time sensitive. That's not a red flag in corporate banking. That's Tuesday. The urgency felt routine because it was exactly the kind of urgency that exists in legitimate business transactions. Acquisition windows close. Deal timelines don't wait for extended verification. $35 million were authorized across multiple worldwide accounts. The manager followed what he understood as proper verification, recognized the client's voice, confirmed via email, and validated the business context. The authorization went through. Multiple accounts. And the voice. It was never real. The Dubai Public Prosecution Office opened a formal investigation after the bank discovered the fraud during attempted legitimate follow-up with the actual director. The real director confirmed there was no M&A transaction, no transfer authorization, and no calls made. Someone else had used his voice. Dubai investigators determined that deep voice, or AI voice cloning technology, was used to imitate the director's speech, not pre-recorded audio, synthetic speech generated in real time. The voice recognition the manager relied upon was defeated by voice cloning fraud, matching the director's vocal characteristics. The control everyone trusted was systematically bypassed. This is synthetic trust, two weak proofs stitched into one strong illusion. The attack combined an AI cloned voice with pretexting emails, two channels, mutually reinforcing false verification. The voice call said one thing. The email confirmed the same. Both were controlled by attackers. What made it harder to catch was the lawyer emails. They added a second layer of professional legitimacy, not just the director, but legal counsel, authorizing the transaction. Dual authority reduced the manager's threshold for questioning. Why question a transaction when both the client and their lawyer confirm it through separate channels? That coordination looked exactly like legitimate M&A authorization. Previous relationship history made the manager less likely to demand verification beyond voice plus email. I know this client. I recognize the voice. That confidence was the vulnerability this AI voice scam operation targeted. After authorization, the $35 million moved rapidly across multiple worldwide accounts. Pre-established infrastructure, coordinated dispersal, suggesting an organized operation rather than a lone actor. UAE authorities sought assistance from American investigators to trace a portion of the stolen funds. Following the money across borders, U.S. investigators identified $400,000 moved to Centennial Bank accounts in the United States. Not the full amount, but a traceable piece proving cross-border fraud infrastructure. Pause there. The $400,000 isn't the story. It's the jurisdiction. This is where a global theft becomes a local case. Why does $400,000 matter when $35 million was stolen? Because it's a confirmed endpoint in the U.S. financial system. A legal basis for American prosecution jurisdiction. Evidence that creates leverage even when most funds remain unrecovered. Dubai had the technology identified. The U.S. had money trails. But how exactly does voice cloning defeat banking authentication? Deep voice, AI technology, analyzes vocal patterns, pitch, speech rhythm, intonation, and pronunciation habits, then generates synthetic speech, matching the target. The critical distinction is real-time conversational capability. The AI generates speech on demand, not playback. This enables natural conversation. The manager can ask questions. The AI-cloned voice responds contextually. When asked about acquisition details or transfer routing, the voice responds naturally because it is synthesizing speech in real time. Human voice recognition relies on pattern matching. Familiar characteristics trigger recognition. What the manager heard wasn't the director, but his brain interpreted familiar patterns as verification. The voice calls synchronized with the email evidence. Attackers controlled both channels. One channel convinces you, two channels convict you. The voice validates the email. The email validates the voice. Both are controlled by the same operation, creating what appears to be independent confirmation. The attackers understood banking relationship dynamics operationally. Managers trust clients they know. M&A transactions are genuinely time-sensitive. They weaponized normal professional behavior. The acquisition timeline created pressure, but the kind that exists in real M&A work. We need to move quickly isn't suspicious in that context. The fraud hid inside legitimate business urgency patterns. Traditional know your customer protocols relied on voice recognition for authentication. They assumed email confirmation meant legitimate authorization. Those assumptions worked for years until they encountered this AI voice scam methodology targeting those exact dependencies. Banking verification, trusted voice familiarity, plus email evidence as adequate authentication for a $35 million transfer. No technical voice verification, no independent confirmation channel. This case represented one of the first major incidents where AI voice cloning targeted institutional banking for multi-million-dollar fraud. Consumer scams existed before, but this scale targeting corporate controls marked a pattern. The incident occurred in early 2020. Prosecution details became public in October 2021 after 18 months of investigation. Here's the operational scale. Investigators alleged at least 17 individuals were involved in coordinated fraud execution and fund dispersal. 17 people suggest division of labor, someone running the voice synthesis, someone running the emails, and a network ready to catch and move funds across borders. 17 isn't a number, it's a workflow. This wasn't opportunistic fraud, It was organized infrastructure suggesting systematic institutional targeting. Worldwide account networks demonstrated coordination requiring preparation. Accounts were established before the fraud. The attackers understood exactly how this UAE bank verified large transfers before making the first call. Federal authorities traced the $400,000 portion to specific Centennial Bank accounts, a confirmed endpoint in the U.S. financial system. 2019. UK CEO voice deepfake. $243,000. 1 year later, the UAE was hit for $35 million, 144 times larger. The point isn't the trivia, it's the scaling behavior. This is exponential scaling as attackers learned institutional controls would tolerate larger amounts without substantially different verification. The same voice plus email model worked for both. Technology previously used for consumer fraud adapted for institutional targeting. Attackers learned that institutions move larger amounts with similar trust-based vulnerabilities. Banking verification protocols were not systematically updated, despite emerging threat evidence from 2019 cases. The gap between attack evolution and institutional control adaptation widened. Relationship managers trusted voice recognition as authentication. The industry assumed email plus a familiar voice meant legitimate authorization. Those professional judgments made sense in normal operations until they encountered systematic exploitation designed to defeat those exact dependencies. This reframes responsibility. The vulnerability wasn't the manager's failure, it was institutional architecture treating subjective trust as technical verification. 4 years later, in 2024, U.S. financial regulators, FinCEN and FINRA, issued warnings. The same voice authentication vulnerability, the same control gap. And here's why this still matters today. The trust-based weakness identified in 2020 persists wherever banking verification relies on subjective voice recognition without independent technical confirmation. This isn't theoretical. It's operational reality confirmed by 2024 regulatory warnings. This AI voice scam pattern, established in the UAE in 2020, wasn't isolated. It documented an institutional vulnerability that remained exploitable years later. How did $35 million move through banking controls designed to prevent exactly this? Voice recognition the manager trusted was synthetic speech. Email confirmation was controlled by attackers. Verification protocols assumed trust equaled authentication. That assumption was the vulnerability. Investigators alleged 17 coordinating individuals and traced $400,000 to U.S. accounts. But the fundamental failure was architectural, not individual. Short version: the bank trusted signals the attacker could manufacture. The vulnerability is treating voice familiarity as authentication, instead of requiring technical verification independent of subjective trust. The AI voice scam threat, documented in 2020, remained operationally viable through 2024 and continues to persist anywhere institutions still treat "I recognize the voice" as authentication.